Okay. All right. Good afternoon, everyone. I'm Travis Soot, Senior Manager here at Trout CPA, and I'd like to welcome you to today's webinar. We're joined by two esteemed attorneys and shareholders from Saxton Stump, Kathy Granbois and Andy Berger. They'll be discussing the Financial Crimes Enforcement Network, Corporate Transparency Act's beneficial ownership reporting rule. I know that sounds like a mouthful because it is. This is a crucial topic for ensuring compliance. Kathy and Andy are both highly experienced business and corporate attorneys specializing in mergers and acquisitions, corporate governance, and general business law. They are also recognized experts in the CTA and BOI rules and have developed a thorough understanding to help your company stay compliant with the rule. Please feel free to post any questions or comments using the Q&A icon at the top. If we don't get to all your questions during the session, we'll make sure to follow up with you afterward. Now, without further ado, I'm pleased to turn things over to Kathy and Andy.
Thanks, Travis. Hi, everybody. Hopefully you're seeing my screen okay. Yep. Currently, we're looking at Andy's beautiful headshot and moving right along into the intro. So I know this was a rule that came out a couple of years ago to a lot of dismay and outrage. It felt a little bit un-American, I think, to a lot of people. And big brotherly, but the reason why it came about was to help with law enforcement in combating illicit activity conducted through anonymous shell companies. So as we all know, up until this year, you could form entities, and really none of them required any kind of absent specific regulation by certain, oversight regulatory departments in the federal government, depending on your industry, there was really no requirement other than through tax returns to identify who owned entities. So we often would form LLCs or corporations for people, and they were kind of surprised, actually, when they learned that their names really didn't need to appear anywhere in the public record of those formations. So that has now changed, at least for the federal government, and many states actually are starting to follow some suit with this. So as an introduction, it requires privately held entities to report beneficial ownership information. And, that's a tricky term that Andy's going to be talking about in depth later in the presentation, to FinCEN, which is, a department of department of the U.S. Treasury. The reporting requirements are intended to apply broadly and impact small companies. So it's really all the little guys that never thought that they would be subject to this type of regulation. And when it comes to the bigger entities, and we'll get into the exemptions a little more here, they're likely exempt depending on how large of a company you are or what industry you're in. Probably many of you, and I read recently that the expectation was 30 million small companies were expected to report under the CTA requirement, and really only a fraction have done so. And that may be because I think a lot of you know that this law has been challenged constitutionally, and it is making its way through various lawsuits, and there was one in June that made it in Alabama, and that ruling was that the act was unconstitutional, and that applied to only the plaintiffs in the case. So although we were all kind of celebrating this ruling, we couldn't rely on it to tell our clients that they don't need to comply with the law, because it only applied for the plaintiffs in that case. That suit was then appealed by the federal government, And arguments were heard in the 11th Circuit, I think earlier in the month or maybe at the end of September. And although there hasn't been a ruling on it, the legal pundits have said from kind of what they observed in the questions by the appellate court, it appears that they're likely going to overturn the federal court ruling. So things aren't looking good for people who are hoping that this is going to be unconstitutional by the time you have to file. And we've been advising clients really even since June that there's really it's not likely that you're going to be able to skirt the requirement because of legal actions. So what you're going to learn about today is, and just so to set expectations, we expect our presentation itself to be maybe 30 to 40 minutes. So we'll have plenty of time for Q&A. So we're going to be talking about what entities are reporting companies, some of the exemptions, the information that a reporting company must include in their filing, when initial reports and changes to reports must be filed, the penalties associated with failing to comply. We'll do a deeper dive. I'm going to handle those issues, and then we're going to do a deeper dive. Andy's going to do a deep dive into what is a beneficial owner and then the steps to take to comply with the CTA. So, reporting companies. Both domestic and foreign entities can be reporting companies under the Act. Domestic reporting companies are corporations, LLCs, or other entities that are created by a filing of a document with the Secretary of State or any similar office. So this would not include a general partnership, for instance, because a general partnership does not have a filing that's made at the Department of State. It also does not include a sole proprietor who has registered a fictitious name. Foreign reporting companies would be included. I'm going to assume that doesn't apply to anybody who's listening to this call, but if they are, organized outside of the U.S., but then are registered to do business in any state, then they too are required to file under the Act. Okay, so the exemptions, and I think this is probably what most people are interested in, hoping that they fall under one. The biggest one that we are seeing is, what we'll call large operating companies. And this, in order to qualify here, your entity has to employ more than 20 full-time employees in the U.S. You must have an operating presence in the U.S. You must have filed federal tax or information return for the previous year that demonstrates greater than $5 million in gross receipts, excluding any receipts or sales outside of the U.S. So generally, you're looking for 20 full-time employees and more than 5 million in gross receipts or revenue. Where you can run into problems here is, and I had this very recently, a company that has a structure where there are disregarded entities for tax purposes, and the disregarded entity has 20 employees and more than 5 million in gross receipts, but they don't file a tax return. So this is one where it seems as though they should be exempt, but they don't fall within the letter of the exemption. and it hasn't been addressed, and there is no, so from those who have discussed it in the industry, we don't believe, that person qualifies for an exemption. Okay, so large operating companies is a big one that our clients are relying on. Public companies, inactive entities. So this is one where a lot of times a client will say to us, especially with like real estate holding companies, that, oh, well, we sold that property and there's nothing in that entity, so we don't need to report, right? And I'm like, no, unfortunately, you do still need to report. So an inactive entity isn't just somebody that isn't doing anything at the moment. It's a pretty stringent test, and specifically to qualify for this, you have to have been in existence before January 2020. So you've been around for a while. You're not engaged in active business. You're not wholly or partially owned directly or indirectly by a non-US person. You haven't experienced an ownership change in the prior 12-month period. You've not sent or received any funds greater than $1,000 in the prior 12-month period. And you don't otherwise hold any kind or type of assets inside or outside the US, including an ownership interest in another entity. So this has to be a very inactive entity in order to comply. And then you'll see on the screen other exemptions, popular exemptions. But think of it as if you're regulated through maybe the SEC or another federal department, and it's pretty clear you are reporting a bunch of things to the federal government already about your owners, that's the situation where you would be exempt from the CTA requirements. Yes, so highly regulated entities. Now, moving on to what is the information a reporting company must report. So you've now decided that you are a reporting company. So what is it that you must report in this beneficial ownership information report? So the first thing you report is information about your beneficial owners. And for entities that were created after January 1 of 2024, your company applicants. A company applicant is any individual who either directly files the document that creates the reporting company or is primarily responsible for directing or controlling of the filing of the relevant document. Here, you're asked to include up to 2 people. So the direct filer for sure. So in our law firm, it's typically a paralegal who is directly filing the paperwork or information with the Department of State in Pennsylvania or Delaware or wherever it is that we're filing. So it's the paralegal, and anyone who's primarily responsible or directing or controlling the filing. And since the paralegal alone is not the person directing or controlling the filing, then for us, it's the attorney that's kind of overseeing that process. For entities that aren't using a law firm to do their filing, then it's going to be somebody within your company that's actually doing the filing and directing the filing. And then the other thing, the other information that the reporting company must report is information about itself. So regarding each beneficial owner, and again, Andy's going to talk about how you decide who the beneficial owners are. But for each beneficial owner and company applicant, the reporting must disclose their full legal name, their date of birth, their complete current address, a unique identifying number. So this is typically going to be your corporate driver's license, your current driver's license or passport, and an image of the document with your unique identifying number. Every once in a while, we encounter someone who either has maybe not an expired driver's license, but maybe they moved, so it doesn't have a current address on it, and they may want to use a different identifying document. So these are the other documents that qualify. Okay, so if you, instead of actually including the information about each beneficial owner in the BOIR, the Beneficial Ownership Information Report, you can, before filing that report, you can register with FinCEN and get your own FinCEN identifier. So for instance, Andy and I, because we know we're going to be overseeing, a fair amount of these formations and company applicants, we have already, we get our own FinCEN IDs, and then every time, so we don't have to continually upload our driver's license every time we do this for a client. So we have our own FinCEN ID, you put in that number, and don't have to worry about updating things going forward or like continually uploading our IDs. The same thing happens with our clients that are part of affiliated groups. It may make sense, instead of continuing to put the same 3 people's IDs through the system, to get them FinCEN IDs, and then we're just reporting their number. Okay, so what information does the entity have to file about itself? Its full legal name, any trade names, any doing business as names, which it conducts business, whether formally registered or not. So there's a place where you put in your full corporate name, and then any of your registered DBAs. But if you don't have a registered DBA, you're still supposed to put in whatever you're known as. Then your complete current address, your state of formation, and an IRS taxpayer identification number, which would include an EIN. Now, when does this have to happen? I would imagine most of you have been inundated with notices either from attorneys, accountants, filing services about the impending deadline here of January 1, 2025. So if you were in existence prior to January 1, 2024, which is the effective date of the act, you have a full year to kind of get compliant. So a lot of us are bearing down here on the January 1, 2025 date. We've done beneficial ownership information reports for our clients, probably for about, I'd have to guess maybe 30 or so clients. I know a lot are just kind of waiting, but we're starting to run out of time to wait. So I'm going to encourage everybody to do this as quickly as possible, or to get moving on it, because December, we're all going to be slammed in December if everyone waits until December. Okay, so that's if you existed prior to January 1 of 24. If you are newly formed, if you were formed during this year, this is kind of a transitional year, so you actually had 90 days to file your BOIR. Starting January 1, 25, you will have 30 days. So it's going to become part of the process. And that's kind of what we've done as a firm. Now, for anyone who comes to us and wants us to help them with forming their entity, this CTA filing is part of the process. So that's just part of the bundle of what we do for them. Now, what about changes? So you also have the obligation to keep all of the information that's filed in the report current. So if you've had a change of address or a change of name or anything else that of those 4 items that was reported, then the law requires that you update your report within 30 days. Okay, so what are the penalties? If you fail to comply, and this has to be kind of a willing failure to comply, these penalties are steep, very steep. A penalty of up to $500 per day of noncompliance, and a fine up to $10,000 or imprisonment for up to 2 years or both for any person who willfully provides or attempts to provide false or fraudulent beneficial ownership information or fails to report complete or updated beneficial ownership information. Of course, it's hard to imagine how this will be policed and how the little guy, who's doing nothing wrong, would have this type of penalty imposed, but that's what it says. We don't know until, I guess, we see what happens. Penalties may also apply to reporting companies and individuals who cause the reporting company not to report or are senior officers of a reporting company at the time of its failure to accurately report or update BOI. I think Andy has a slide as to senior officers, but the examples of senior officers that are listed are the CEO, the COO, CFO, president, general legal counsel. Yeah, I think that's what they list. There is a safe harbor, what they call a safe harbor, that if you realize that something that you filed was incorrect, then you have 90 days from the date that it was filed to correct it. So long as you correct it within 30 days of when you realized that it was incorrect. Okay, that's the end of my part of this presentation. So Travis, do you want to say anything about Q&A at this point, or?
Nothing come through yet. If you want to continue on, or if you want to pause and see if people have questions on your section, fine with either one.
Yeah, anyway, I just encourage people, throw any questions you have in the Q&A, and we'll address it probably at the end, because Andy might be answering any of the questions that you have. So at this point, I'll turn it over to Andy.
Thanks, Kathy. Good morning, everyone. So we've talked about what is a reporting company that needs to report under CTA. So now let's get into, as Kathy said, who is a beneficial owner whose information needs to be provided as part of this process. So the definition of a beneficial owner under the CTA is any individual, and that's important because really what they're looking for are people, not entities, who directly or indirectly either A, exercise substantial control over the reporting company, or B, own or control 25% or more of the ownership interests of the reporting company. And we'll look at each of these prongs individually, but it's important to note if you're a purely passive investor and you own less than 25% of the company, essentially on a fully diluted basis, and we'll get into that in a future slide as well, but that less than 25% interest is your only connection to the company, you're not an officer, you're not a director, you don't affect control in some other way, then you're not a beneficial owner for purposes of this act, and you don't have those filing obligations. But keep in mind that this is an alternative test, so you really got to look at both prongs of the test, either substantial control or you own or control 25% or more. so you don't have to satisfy both. The substantial control part of this. So when we look at what is substantial control, the act itself doesn't really go into great detail about what this actually means, but FinCEN has it's called a small entity compliance guide. It's available to download on their website, and I'd encourage you to take a look at it, or, I think, Travis, we can kind of make a copy available for anybody who wants it after the program. But it's a very helpful guide, and they provide a lot of guidance on a lot of things regarding, and in particular for this, who rises to the level of exercising substantial control of a reporting company. So first, we have anyone who serves as a senior officer of the reporting company. As Kathy mentioned, so this is anyone who has a title of president, chief financial officer, general counsel, chief executive officer, chief operating officer. Interestingly, not the corporate secretary, sorry. But all of these people, if you have this title, you're deemed to exercise substantial control simply by virtue of having the title and your position at the company. So if you have that title, you're required to be reported as the beneficial owner and provide information, really regardless of your role. It's tied to the title. Also, any person, can you hop back, Kathy? Sorry. Yeah, sorry, I skipped ahead. Any person, regardless of title, who performs similar functions, any person who has authority to appoint or remove either a senior officer or a majority of the reporting company's board of directors or similar governing body, for example, managers of a limited liability company, any person who directs, determines, or has substantial influence over important decisions made by the company, or in sort of a catch-all, any person who has any other form of substantial control over the reporting company. So obviously they're really casting a broad and in some ways fairly subjective net over who may have substantial control over the company and is going to need to report under CTA. So you can skip that, Kathy, sorry. So a person, regardless of title, who directs, determines, or has substantial influence over important decisions made by the reporting company is a beneficial owner. So this slide and the next one has really a non-exclusive list. I think this was taken from the small entity guide of some of the things that constitute important decisions for purposes of this. For example, the nature or scope of the company's business. So if you're expanding into the decision to expand into a new product line or geographic area, really fundamental transactions, sale of the business, sale of the assets, issuing equity, entering into a joint venture. You can hop to the next one, Kathy. Approving the operating budget, executive compensation, terminating or entering into significant contracts, things like that. Those are all deemed to be important decisions for purposes of this analysis. This slide and the next one has again, a non-exclusive list of examples of what constitutes exercising substantial control. So that would include individuals who have board representation, ownership control, or control of voting power. You can skip ahead, Kathy. Control over a parent or intermediate entities, or some form of effective control under some sort of contractual arrangement. Okay. Go ahead. Next slide. So that's briefly sort of the first prong of the beneficial ownership test, whether you exercise substantial control. And again, it's very broad, it's very subjective, and it can mean a variety of things. The second prong is anyone who owns or controls 25% or more of the ownership interests of the reporting company. And so, likewise here, it's a very broad definition of ownership interests, regardless of whether the interest is transferable, whether it's classified as stock or some other instrument, whether it confers voting power or rights. So note that this would include if you're a small business with Class B or non-voting stock, that could be included in this as well. It's not tied to necessarily the voting rights. Also, it would include interests in a joint venture, certificate of interest in a business trust. Really don't see those much anymore, but that would be included as well. Again, just the concept is very broad net, very subjective. Again, the ownership interests can include capital or profits interests, in an LLC, convertible notes or other convertible instruments, warrants, other contractual rights or understandings to affect ownership in some other means. So again, just the persistent theme is just an extremely broad net to catch up potential beneficial owners. So, and really kind of the purpose of this is so that you're aware that if you have some sort of non-traditional interest, some sort of contractual, maybe it's extra contractual, just an agreement, you really, I think the advice would be to look very closely at it, maybe talk to your attorney or seek out an attorney to determine whether that interest constitutes an ownership interest in the reporting company for purposes of these CTA reporting requirements. But it's probably safe to assume in most instances that it probably does. So you'll see here, as I mentioned, I think on a prior slide, an individual can own or control their ownership interest either directly or indirectly through some sort of contractual relationship, whether it's as a custodian, through ownership of intermediate entities. So if you have some sort of holding company structure, that would apply, and they'd ultimately look through the holding company up to the ultimate individual parent. So if there's some sort of complicated structure where you have different entities that are interlocked or intertwined or related through common ownership, you really need to look through those entities to find the individual owners. And keep in mind, an important part of this is separate reports need to be filed for all of those entities, unless those entities fall within one of the enumerated filing exemptions that Kathy mentioned earlier. Something that you see fairly often, whether it's for estate planning purposes or otherwise, is that occasionally you have interest in an entity that are owned through some sort of a trust. Then the question is, do you have to go ahead and report for the trust? And unfortunately, the answer is yes. The Small Entity Compliance Guide includes some very helpful guidelines about who, under a trust arrangement, would need to report their individual information. So first, that's your trustee or the trustees of the trust, or any other individual that has authority to dispose of trust assets. It could also be a beneficiary if that beneficiary is the sole permissible recipient of the trust income or principal, or has the right to demand a distribution or withdraw substantially all of the trust's assets. And finally, the grantor or settlor of the trust, if they have a right to revoke the trust or otherwise withdraw trust assets. So again, if you hold your interest in a trust, you should really seek or discuss with your estate planning or corporate counsel the terms of the trust to determine who's required to report, or if there's any applicable exemptions. For example, I think this is on a future slide, but minor children, for example, are exempt. So if you have minor children that are beneficiaries of a trust, they wouldn't need to provide information for this. The methods for calculating whether 25% ownership or control threshold are met, essentially, again, it's determined on a fully diluted basis. So it's calculated as a percentage of the total outstanding ownership interest of the reporting company at the present time, but as if any options, warrants, et cetera, had been fully exercised. So again, the concept is really on a fully diluted basis. It gets a little more complicated when you start looking at capital or profits interests, typically in an LLC or a partnership context. But again, fully diluted. So the concept is the individual's ownership interests are their capital and profits interests as a percentage of the total of all outstanding capital and profits interests. So as I mentioned, yeah, I think Kathy, we can hit that. I think, again, it's just really the fully diluted concept. There's 5 categories of individuals that are exempt from the beneficial owner definition. As I mentioned, minor children. So if a minor child is a beneficiary under a trust, again, they're not required to file or be identified as in the filing. Individuals acting as nominees, intermediaries, custodians, or agents on another's behalf. Obviously, this doesn't include the trustees in a trust context, But if there's a corporate agent holding stock, maybe unlikely for a small private company, but they're not going to have to go and report information because they're holding it in that sort of agent capacity. Certain employees who are not senior officers, for example, if you have someone who's a vice president, they're not, by virtue of their title, a senior officer. However, if given their responsibilities, their role, it's entirely possible that the control that they've been given or the influence that they exert over the entity rise to a level of substantial control that they may need to file in that context. So again, it's really facts and circumstances, a little bit subjective. So what this really requires, unfortunately, is an individual sort of case-by-case analysis into the structure of the organizational chart of the entity and identify the individuals who are really exercising any level of control at the company, not only on paper by virtue of their title, but really in practice as well. So it's really a case-by-case analysis of that. Compliance with the CTA or complying with the CTA. So really, once you go through all of that, you determine that you're a reporting company, you're not exempt, you've identified your beneficial owners for purposes of the act. So what's next? How do you comply? So once you've done that, you need to start the process, as Kathy mentioned, obtaining all of the personal information, copies of driver's licenses, passports, etc. The other thing that you really need to keep in mind is that you have to really put a process or a mechanism in place so that you can monitor and report changes in a timely manner to previously reported information, to keep everything up to date. So remember, as Kathy mentioned, you only have 30 days to make, Kathy, I think it's 30 days to make a filing with respect to any change in beneficial owner information. So you really need to have a process in place to monitor that on an ongoing basis. So there really is sort of a continuing regulatory burden associated with this for a smaller private company that's just an extra layer of, unfortunately, compliance. Kathy, you can flip over. Yeah. So it's important to remember, we talked about this a little bit. It's important to remember that an individual may indirectly own or control an ownership interest in a reporting company through one or more intermediary entities, a reporting company with one or more entities as owners or in management. And the example that's on the slide here is actually quite pertinent. If you have a limited partnership with an LLC, limited liability company that's acting as the general partner, you would need the limited partner and the limited liability company that's the general partner to provide, separate reports for those two entities, and beneficial ownership information would need to be provided for both entities. Kathy, you can skip the next one. So this slide and the next one are largely touching on what we've really just spoken about, putting in place a system where you're promptly notified of changes in information. It's also important to note that you may require some sort of analysis. Kathy, you can skip ahead. Some sort of analysis of the organizational documents, bylaws, shareholder agreement, operating agreement to make some of these determinations, because some of these obligations, as I mentioned, are based on the contractual terms of some of these, the contractual terms, of some of these documents that are in place, some of the organizational documents. So it's really kind of taking a bit of a dive to look at those documents as well. Kathy, you can go ahead and, is that the, yeah. So one other thing on that last slide, I apologize. Just be mindful that you're collecting a lot of data and information for individuals, and there may be security requirements for personally identifiable information. You're going to have access to, driver's license numbers, passport numbers, EINs, and that stuff all should be, maintained securely and protected as well, so it's not inadvertently disclosed. So that's another sort of component of this to simply keep in mind as you're going through this process. So Kathy, I think that's the end of the presentation now. Travis.
Yeah,
turn it back
appreciate
over to you.
that. Thank you, Kathy, and thank you, Andy. We do have a couple questions here coming through in the Q&A, so I'll go ahead and read them off to you, and either one of you can answer. So Jennifer chimed in with, we are an ESOP that is owned by a trust. What do we report?
Kathy, I don't know if that's come up in any of the analysis before. I mean, so the entity is, I'm assuming what that means is the entity itself is owned by an ESOP, and so all the ESOP shares are held in a trust. So I think, the entity would report, and then you'd need to look at the trust document and the roles and the trustees to report on that. So without looking at the documents, and I think I'd have to sort of couch it in that respect. But as long as the entity we're talking about, I assume it's a corporation. So it's a reporting company, presumably, unless it falls within some sort of enumerated exemption, and the beneficial owners would include, I would think, that ESOP that owns. You can have ESOPs. I'm assuming it's 100% ESOP owned here, but you'd have to look at all of that information. Kathy, does that make sense?
I don't have anything
And she followed up
Yep.
and said that is correct. We have 3 trustees, but also have a BOD and executive board, so board of directors and executive board.
Yeah, so the beneficial owner is that two-pronged test of substantial control and ownership. So it sounds like you're going to have multiple beneficial owners. So I would encourage you to speak with your attorneys. If not, we could certainly help and be engaged in that respect. So
Absolutely. Thanks, Andy, on that one.
Mhm.
One hobby had come in. It says on the BOIR form, the company applicant information is the individual completing the filing or the actual owner information that could also be mirrored on the BOI information page on the BOIR. Thinking they're asking, is there a difference between who's filing it on your behalf versus the actual ownership information on that initial applicant stage of the form? Like, whose information do you report? I think, Javi, you can feel free to reply again if I'm misinterpreting your question.
I'm reading the question. The company applicant is the person, and this is only going to come into effect because I know there's some confusion when you're doing this yourself. I had a client ask me about it, that if your entity was formed prior to January 1st, 2024, then on that screen, you would check at the top, it's like existing entity or something to that effect. And that entire page gets grayed out and you don't fill it in. So I had a client who we had formed them a couple of years ago, and he was doing his own report on the FinCEN website. And he's like, what's your FinCEN ID? I'm like, you don't need my FinCEN ID. You can just say you existed prior to 1/1/24, and that'll move you on to the next page.
Okay, thank you. Miriam said, do owners uploaded photo IDs need to be updated as those IDs expire and are renewed?
I think so. Unfortunately. That's one of those that you just have to have some kind of system in place. Hard to imagine how hard the government's going to come down on somebody who forgets to do it. But nonetheless, there's not an exemption for that. And yes, you're required to have current information reported.
And more of an internal question, because it relates to Miriam's question here of, do you guys have a preference with driver's license or passport when you're filling this BOI report out? I think driver's license numbers, at least in PA, always stay the same, but I think when you renew your passport, your number may change. So I don't know if you guys have run across that or have a preference.
Yeah, I think driver's license, there's some other nuance with a passport that made it a little less desirable. I can't remember exactly what it is. But yeah, I think the driver's license is likely the way to go.
And when that expires, making sure you go in and update that. Okay, great.
Right. One of the things, just to add on to the compliance aspects that Andy mentioned, especially where you have an LLC with multiple members, or like investor members or limited partners, while it's unlikely that they will be beneficial owners because they may not exercise substantial control and they may not have 25% or more. You are starting to see language being inserted into the governance documents that require that members comply and, timely respond to requests by the manager with this type of information, and, penalties for failure to do so.
Okay. Another one came in. Hi, would you go back to the slide regarding what a person should be doing if they just moved and their license doesn't match their current address? It was when Kathy was speaking.
Was that actually in one of the slides?
I think that was just part of the discussion. I think really just the idea is unfortunately you need to update that information, and just provide the new address information and update your filing.
Yeah, we have had a situation where we have a client who was in the process of moving, and because of that, and this is an existing entity, they were formed prior to 1/1/24, so they have until 1/1/25 to do it. But we were kind of doing the compliance work for them. They said, oh, well, we're moving in July. We're like, okay, let's just not do it. Let's wait until you've moved, wait until you have your changed address, and we'll report it then. Because now I don't think that, and I have to check this, and Andy, maybe you know the answer. When you report for a beneficial owner what your address is. Oh, this is what it is. For a passport, your passport doesn't have your address on it. Right? Your passport doesn't have your address on it. And your driver's license does. And I cannot remember, and Andy, maybe you know, if your current address is not reflected on your driver's license, but you accurately report your current address, and your driver's license has an old address, I don't know if that's problematic, because you have reported your current address,
right?
And you have uploaded a ID with a unique identifying number.
Right.
I don't think it says that your address has to be the same. It's
right,
just that if you move, the address that you reported needs to be updated. Does that make sense?
Yeah, because I believe the photo ID is provided only for purposes of confirming the unique identifying number, not the address. I think that's the distinction.
Yeah, so I may have said something that was confusing or wrong the first time around. So there's the right answer.
Thanks, Kathy. No problem. And Jade had followed up on that same question. Could you provide the temporary address card as supporting documentation? That's a good point. Usually if you don't get your actual ID updated in PA, I think you get that yellow temporary one. I'm sure you could upload that to be safe, but to your point, may not be needed.
Right.
Okay. Jennifer followed up on her question, how do we file? I did not see the actual website. So where would she go to self-file?
If you, let me see if I have it up and I could actually tell you exactly. If you throw it into any search engine under BOIR CTA, it'll come up, but it's fincen.gov. Yeah.
I think it's on the U.S. Department of Treasury website.
FinCEN.gov/BOI.
They have a great FAQ section too, Kathy, I've noticed on their website that I would also direct people to with additional questions that may arise during their self-filing process. Hobby did follow up on his question from earlier. He said, so yes, we were formed before 2024. The BOIR document information requests reporting company information, company applicant information, and beneficial owner information. I want to confirm if there actually is a difference between the company applicant information screen and the beneficial owner information screen.
Yes, there's a difference. The company applicant information screen, if you existed prior to January 1, you would check the top box that says existing company, and then everything grays out. You can't fill anything in because they're not asking for that information. And then it'll advance to the company information screen. And at the company information, that's the reporting company information. That's when you put in the full name of the company, the jurisdiction, et cetera, and then it goes to the beneficial owner screen, and that's where you fill in the beneficial owners.
Okay, that makes sense. Thank you for clarifying that, Kathy. I did have one chat come through as well from Ron asking for the driver's license, submit front side only.
I think that's right.
I think that's right.
Yeah.
Right.
I'll share my screen real quick. This is kind of the home page for the filing. You'll see it's www.fincen.gov/BOI.
Great.
I would say if you're doing this yourself, one of what I find to be a little tricky, or people are just kind of speeding through it, don't speed through it. Really read each one. The beneficial owners, it doesn't prompt you. It doesn't say, like, after you complete one, it doesn't say, do you have any more? You have to know to add beneficial owners each and every time. Otherwise, it'll let you just complete it, and then you will have filed, and then you're like, oh crap, I didn't realize. And then you have to go back and amend your filing, which then of course gets things mucked up because it takes a while for them to realize that you already filed, that you're trying to correct it. So just be careful not to speed right through that, and make sure you're proactively adding additional beneficial owners.
Thank you for that, Kathy. And then Andy, I had one more that we get internally a good amount here. What if my company does not have any one owner over 25%? How do we pick who to report on that?
Then it's I think the substantial control piece, right? It's that two-pronged test. So then you'd have to look at president, CFO, COO, general counsel, anybody else who essentially has that sort of functional substantial control.
Perfect. Thank you for clarifying that. The one question we do get internally at Trout is Trout preparing these tax returns? We are not, just making sure that our clients are aware of that. That came from our insurance carrier. We do not practice law, and they consider that an unauthorized practice of law on our end. So we are referring all this out to our friends at Saxton Stump and other attorneys. We highly recommend using your attorney first if you have questions on anything. If not, you can also self-file. But I just wanted to make sure we were clear that Trout is not handling these filings for our clients.
And one of the questions that we get a lot is, how much is it going to cost if we have you guys do it instead of us? And in the beginning, we were trying to see, can we do this for a flat fee? And it's just very difficult because until we know what your structure is. But what I can say is, for a very straightforward single member LLC, or maybe there's two beneficial owners and I do everything, I call all the shots, I'm the only person involved, something like that, we can do that for, it's going to be under $300. So it's not going to be, it certainly won't be any more than kind of a filing service would be.
That is helpful. Thank you, Kathy. I know it's tough. Yeah. Similar to us with tax returns, depends on how much is going on. Similar situation for you guys on the BOI reporting side. So, well, great. I want to be very, very respectful of your time. I think with that, anything else you want to add before I do the final send off?
No, I think I just saw, did I just see a chat?
Yeah, is that the one? I own two companies, each having separate EINs. Do I file each one separately? I think the short answer to that is, yeah, you're going to have a BOI report for each individual reporting company.
Yep, 2 different filings.
Yep. Yeah, sorry, I just saw that come across.
Yeah, good catch. I missed that. Thanks, Andy.
Yep. No, it just popped up like a second ago.
Yeah, and in that case, you know, if you're the sole beneficial owner, you can decide whether you want to get yourself a FinCEN ID, kind of go through the process so that for the second filing, you only put in your ID number as the beneficial owner, or you just re-upload your driver's license again. With just 2, not sure it's worth getting your separate FinCEN ID number, but if you had more than 2, I would probably go the other route and get yourself a FinCEN ID number and be able to use that instead of uploading each and every time.
Great. And if anyone does have additional questions, feel free to reach out to us. We can pass them along to Kathy and Andy, and we can take it from there. So I think that's it. I didn't see any other chats, no more Q&A. So on behalf of Trout CPA, I want to sincerely thank Andy and Kathy for their time today in this great presentation. Thank you to all the participants for joining on the call and for all those that will watch this back later. If you have any additional questions around BOI reporting, please feel free to reach out to your attorney or Kathy and Andy at Saxton Stump, and they can help you. Hope everyone has a great day. Thank you both.
Thanks, everyone.